Some of you may know about these and some of you may not, so I just kind of wanted to touch on bank statement loans. So, and I'm actually in the middle of one right now, so which is why I'm like, oh, it's fresh on my brain. So if you have a self-employed borrower, like most of my self-employed borrowers, who just writes everything off on their taxes, like they all like to do, this is actually a good backup option. Literally all we do is we can get anywhere from 12 to 24 months of bank statements, of their business bank statements, and we run them through and we can determine income that way. That way you don't have to submit tax returns, all the P&Ls, all of those things that sometimes, you can have a buyer that makes $200,000 a year, and when they're done with their taxes, I'm like, oh, we can use $40,000 because they've written everything off. Whereas with the bank statement loan, we are literally only looking at the income that is going through their bank statements. This gives them a lot more buying power. This gives them a lot more options to kind of get them into the price point, because obviously they're making the money, they're just not showing the money because they don't want to pay taxes on it. You can, on the bank statement loans, you can put as low as 10% down. And these aren't really details that you need to discuss so much with your buyers. Just I'm letting you know. The rate obviously will be higher the less money you put down. There is not mortgage insurance for the bank statement loan, so even if they're only putting 10% down, they don't have mortgage insurance. What's the other thing? Now, with buyers that are putting only 10% down, they have to have at least a 740 credit score. If you are putting 15% down, they need to have at least a 700 credit score. What else? And then I will say this, most buyers who are doing bank statement, if they're only putting 10% down, yeah. Most buyers who are doing these are putting at least 20% down. I mean, they're coming in knowing exactly kind of what they're doing. They just want to get into the house. What else did I want to tell you about?
How is the interest, even if you put 20% and it's bank statement loan, is it higher than?
It is higher, yeah, because it's considered a higher risk loan.
Yeah.
So for example, the one I'm working on right now, honestly, they're in the high sevens with the rate, but we only have 12 months bank statements for this one. So, that's, if you submit 24 months, the rate's a little bit better. So it just kind of helps them a little bit if they have that ability. If they're like, well, business wasn't great the year before, then we would just go with 12 months, but it just kind of affects their rate. Mm-hmm.
Would it make sense for someone to do this just to get in, and then you tell them, hey, you can always refinance?
Yeah, and that's, yes.
Longer streak with better years.
100%. Mm-hmm. Again, then you go back to, you need to kind of not alter the taxes, but you need to be leery of, all your write-offs, and then, we can go back and refinance and get them into a better position. Yeah, 100%.
What's the credit score gotta look like for 20% down?
Those are the criteria for less than 20% down. You can go down. Obviously, if you're in the mid 600s, that's a struggle in itself. So it's just kind of a case by case. I want to say the minimum is 640, but I need to double check that. I just kind of know when you're putting less than 20% down, they have certain thresholds that this credit has to stay at in order to work. So, yeah. We're talking about bank statement loans. So I was telling them I'm kind of in the middle of one right now, so it's still fresh in my brain. What else? I'm trying to think of what else I've been working with on these. I have to say,
With the bank statement loans, do you even have to do a credit pull?
Yeah, you do.
You do?
Yeah, because I have to send them their credit report. Yeah, because I was telling them because the company I'm using, and we have a few that we broker out to, this Lensure, they're phenomenal. They have great ops team. Everything about them is great. But if the buyer is only putting 10% down, they have to have at least a 740 score. At 15% down, they need to be, I think, at a 700, and then down from there. So it does make a difference, especially when they're calculating rate and all that. Gosh, what was the other thing? I had something else, and like I said, I kind of got thrown into this. So I usually have a lot more talking points. Here's the other thing I will say specifically about this company, Lensure. not that you guys care too much about this, but with a lot of the other companies, they will look at their, and I think it mentions it on here, maybe it doesn't. Most companies will automatically just put 50% of their assets as operating income, whereas Lenture will actually go down to just, they can get it down to 10% if need be. So again, just gives your buyer more buying power. They can do loans up to $3 million. So yeah, I just think it's a great option for, like I said, if you have those buyers that are just writing everything off, it's like, well, let's try this and get you in the house and, go from there. So any questions?
What is NSF?
Where does it say that?
Common sense consideration of NSF?
Oh, non-sufficient funds. So if they, if they've got, like if they've overdrafted on their account and, which you really don't want someone to be doing that, but, sometimes things happen and, overextend payroll or something like that. And so, they take into account that, okay, sometimes these things happen. If, as long as you can easily explain it and, it's not like every single month, then they are willing to override some of those things.
And you can use these on investment properties.
I have another flyer. If you want, I have another flyer for that, which I can print out for you, or I'll send it to you.
And can you leverage the rent for the qualifying amount on the loan? Does that make sense to offset it?
I believe so.
Okay.
I'll double check that with them, but I'm pretty positive, yes. But I'll send you that information as well. DSCR. Yeah. I didn't want to get into a whole other thing, so, but I'll save that for next week.
Topic next Monday.
I know, well, that's what I was saying. Next week, DSCR. Any other questions? I mean, really for you guys, the biggest thing you need to know is, oh, you wrote everything off on your taxes? We have another option for you. Why don't you call Nicole and she'll walk you through it. So, yep. That's it. All right, guys. Quick and easy.